Thank you very
5D.
much. Indeed. Moving on to also show, I think, increasingly how these items link together. I just wanted to flag, I think it has already been talked about, Mr. Chair, you raised it to discussion as well. Mr. President mentioned it also. Wanted to just highlight the Green Initiative Task Force. Certainly from my perspective, I'm eager that Travis Antoniono, who spent a giant amount of his October, November and December here till many hours of the evening, as Travis is wont to do, deserves huge credit for his role in putting this together, and Brian as well as this huge support. I'd also like to call out as well, it was talked about, we have an amazing design team and communications team who also burnt the midnight hour oil to get this out in time. So huge thanks to them. So Travis, can you just spend 2 seconds orientating the board around this?
Yeah, sure.
Just be so generous.
Oh, I'm done. Yeah.
Travis, take a couple of minutes.
Yeah, you can have a
Okay.
couple.
Well, just to go about the accomplishments that Travis Antoniono, Investment Officer in Sustainable Investments and Stewardship Strategies. But to kick off where Kirsty left off, the individuals specifically that we want to highlight in the communications team would be Renee, the editor, and then Bao Tran, the graphic designer. I think staff is overwhelmingly pleased and very excited about this report, not only the way it reads, what the information is presented, but also the way that it looks. I think that's something that's becoming more and more important in today's age, how things look, how things feel, and ultimately how it resonates or influences how it resonates with individuals and the readers. So very proud of the report. But to kick it off, yes, this is the newest version of CalSTR's Green Team report. It's really an evolution from previous reports. And there's really two major initiatives that we accomplished through this report. The first one is that this report satisfies Senate Bill 964, which required CalSTRS to further disclose on its climate-related risk. And the second one, this is really where staff elected to go above and beyond. The second one is where we decided to make sure that this report aligns to the TCFD standard. That's the Task Force on Climate-Related Financial Disclosure. If you go to the next slide, this is kind of outlined on the right side of this. And as you can see, the TCFD incorporates not only holistically your view, but really dives into your climate-related governance, strategy, risk management, and metrics. So this is all satisfied within our report. And outside of that, I can say that we accomplished several other things within the SB 964, talking about our further engagements, our shareholder proposals, our votes, and also how our initiatives align to the California policy goals. So I would open it up to any questions at this time. Oh, one other thing. We want to highlight all the rest of the Green Team members. You see 3 members in front of you today, but there's about 30 plus other members, not only in this room, but upstairs that have partook in the development of this report. All of the asset class profile pages, as well as all the investment examples, have been developed from members beyond us. So we want to recognize the accomplishments that each of those individuals have made.
Thank you, Travis. We do have a few members' questions or comments. Lynn?
Oh, thank you, Mr. Chair. Travis, Kirsty, Brian, and to the whole team, this is such a great report. Every year we look forward to reading it, and I think this year really you knocked it out of the park. It's wonderful. And I had a couple of quick questions for you. I understand under SB 964, I think the reporting cycle is every 3 years. Is that correct?
That's correct.
So how do you plan to handle that next year? Will you still include some of the 964 within the report, or just will we look for it in 3 years from now?
We've had some preliminary discussions on how we plan to tackle this based upon the fact that with legislation, we do have new requirements. It is every 3 years to be able to report on the public markets. But I think based upon the fact that we do have a report that is TCFD aligned, we want to perhaps dive into different aspects of the TCFD alignment into further detail. So perhaps in the interim years, let's say next year and the year after that, we might dive into some of the physical risk. That's an idea that we've spoke about, but I don't want to get too ahead of ourselves, and we're happy to continue to provide that communication back to the board as we get a little bit closer, further along in the year.
Okay, great, thank you. And I'm
I'd
also
just add to
curious.
that, sorry, Lynn, just recognising and hearing the focus on communication, knowing the different formats that we have to communicate. We will be continually highlighting our activities related to managing climate risk and investment in multiple formats, whether it be through the value of engagement, whether it be through, as Travis said, an annual update. But I think we have to continue to find ways to communicate about these activities. And so we're committed to that.
Thank you. I think that's really important. And also just curious, I know that this report was delivered by the end of last year to the legislature. Have you received any comments, questions?
I haven't directly. I'm wondering if Joycelyn is here? No. Not that have come to us directly. We did deliver it to them, but no.
Great. Thank you.
Chris?
I also want to applaud the team. They did an awesome job. It's fun to have amazing staff and turn them loose and get out of their way and then see what they're able to produce. The one thing I really want to highlight for all of you, because it was a pleasing surprise to me, on page 69 of that very thick report, it actually already shows that CalSTRS, our equity portfolio, is 11 years ahead of the pace for a 2-degree scenario. So while we face lots of criticism from outsiders, we are doing something, and we are already 11 years ahead. And that's a number I would like you to keep tracking, because we don't want to just sit idle and wait till 2031. We want to stay ahead of pace all the time. And I think that's an important reflection of the work you've already done, the enhanced indexes we've done, some of our active management, the fact that we've hired sustainable equity managers who are already looking at things. So we're a decade ahead of pace where our peers are when it comes to integrating climate change risk and the 2-degree scenario into our equity portfolio and in our fixed income portfolio. The other thing I would highlight, we don't print lots of these, but for the back of the room, there are a stack of these half-sheet size cards that have QR codes, so you can quickly download by your phone the sustainability report, which is our GRI report, the Green Teen Initiative report, and our comprehensive financial statements. So those are available to the public. I encourage people to read them and grab it.
Karen?
Thank you. Great report. It was an easy read, and I really liked the way the table of contents was written out. I was just, because we do a lot of engagements with a lot of the companies, the one that kind of I focused on was Duke Energy and some of the things that were in there. And as part of your monitoring and watching some of these companies, are they doing what they say are they doing? What are their returns? How do we know if our engagements, CalSTRS engagements, have been successful? What would you term as successful? Or is it too early to tell in that? And then basically, are they walking the walk?
Sure. Yeah. Ultimately, Duke Energy is one of the companies that is in our portfolio and then a major contributor to the total emissions in our portfolio. So when we had the opportunity to join Climate Action 100, which is a widespread global engagement initiative comprising of nearly 400 different investors, $35+ trillion of assets under management, we had this opportunity. We specifically looked for companies that we knew that we could actually make a difference. And so we elected to be the lead investor, taking on the lead for that engagement with a number of companies, and Duke Energy being one of them. During the course of this engagement so far, I will say that this is one of the companies that not only CalSTRS, but the rest of the Climate Action 100 group is very proud of because of the significant commitments that the company has already undertook and committed to. They have committed, as the report shows, they have committed to going towards net zero by 2050, as well as significant reductions in their carbon emissions by 2030. So that in itself is an initial step to walking the walk. Ultimately, we don't have a company set it and we forget it. We fully engage on a continuous basis and are still having regular meetings with the company on several other issues, and then also to ensure that they're making steps for their generation plan, their electric generation plan, to make sure that they are in alignment to that goal that they set. So that's an example, I would say, of a company that is, to this day, walking the walk.
I'd just like to add to that as well of the importance of recognizing that when you look at the sector contributions to overall emissions within our portfolio, the importance of utility companies, and that we hear an awful lot, obviously, about the producers of energy, but actually it's the demanders of energy that really are the biggest contributions to emissions. And so I think we need to be very strategic in engaging both the demand as well as the supply side. And that often doesn't get talked about here, but I think it's really critical. If utilities represent a third of the emissions within our portfolio, then we better have a plan for utilities as well. And I think Travis's leadership, this is with investors across the board, whether it's in Australia, Asia, and the rest of the UK and Europe as well. It takes a coordinated force to get those investors on the phone continuously with senior management at these companies and sort of say, we expect these emissions reductions as part of your long-term strategy because we think you're going to be a better investment for us. And so I really just want to highlight the scale of that engagement that's going on. When I hear that engagement doesn't work, I do find it really frustrating because we're at a different stage of global engagement than we have ever been before. And with BlackRock joining the Climate Action 100 just a couple of weeks ago, there's now $42 trillion of assets calling on companies to reduce emissions. So we're in a very, very privileged place now to influence that change. And I think we're playing a leadership role of some of the companies that are most significant contributors to emissions in our portfolio, and we must take that very seriously.
Aaron.
Yeah, and I agree with everything you just said, Kirsty. I think, obviously, BlackRock, I think we have 10% of our assets in I don't know what the number is, but a lot with BlackRock. So having them join Climate Action 100 Plus is significant. And I think it just shows, a fund like them taking that kind of position is important. I do, though, like in conversations I'm having, you hear a lot about greenwashing and you hear a lot about just commitments, right? So Duke Energy making commitments or Larry Fink making a commitment, and it's easy to make a commitment and then break it, or words are, And so I guess I would say, and I know you're going to do this, but I think it needs to be said in open session that I just think we need to kind of hold these companies to the fire, because I do think we sort of get criticized for engaging, but there's a perception that isn't moving the needle. And I think we need to, again, tell the story of how it is moving the needle in real dollars and real action, so that it's not just perceived that it's just people telling us information or making commitments to us, because right now ESG is trendy or climate is the big topic, but that it's really about dollars and moving dollars and making that commitment financially to ESG. And so I just think that's so important, because I think that's our criticism, is it's a lot of talk and not a lot of action, and we have to hold our partners to the fire to really be making this positive change in dollars and not just words, right? Sure.
For the utilities section, we do evaluate the integrated resource plans, which utilities have to file on an annual basis. We do understand the CapEx and the expenditures that they're making towards different generation. We dive into the generation mix, the renewables that they're looking at, the profiles of renewables. So the granular effort that we go through is quite detailed in the utilities sector specifically, and also on the oil and gas sector.
Joy.
Thank you very much. Great work on the report. And Chris, I appreciate your calling to our attention the section on page 69 about analyzing our public equity portfolio and how it looks under the different climate scenarios. So I took a look at the metrics and targets that are at the end of this report, and I just wondered are those metrics and targets ones that are recommended by the Task Force on Climate Disclosure, or are they our own metrics and targets that we establish ourselves?
Sure. I will say that the metrics section, if you look at the number of TCFD reports out there globally, CalSTRS is one of the very first asset owners to produce a TCFD report. And in fact, we're, as far as we're tracking, we're only the second behind a Midwest second firm asset owner in the US to provide a TCFD report. So the sample size is still relatively small, but I think that is one area that there isn't a universal consensus on which metrics to report on. We refer obviously to SASB to understand what perhaps is more material that we should be reporting on. And we do refer to the TCFD guidance. So a number of the metrics that are included in here are included in the TCFD guidance, but then we also elected to provide additional metrics which we thought would be of interest or which, highlight some of the activities that we've undertook.
Got it. Okay. Thank you.
Very good. So that concludes board member questions or comments. I want to thank staff, everyone who's done this great work. It's great evidence of all that we are doing, and it speaks volumes. Yeah, I think we have to accept the report, right? Is that what the request is, or is it?
It was actually more of an
form
information
informational?
item.
It's information,
So
okay.
yes, but thank you. If you'd accept it, I'd be happy as
Yeah,
well.
we've accepted it.
We'll accept it. We
We're
will
open arms.
physically accept it.
Thank you.
Thank you.
Thank you very much. We do have 8 members of the public that have put in requests to speak. If my math is correct, it gives you approximately 1 minute and 20 seconds each. Diana Curial. Is Diana here? You are? Okay, hi. So if we could set the timer for 1 minute and 20 seconds per public comment for this item. Diana, welcome.
Good morning. My name is Diana Curiel, and I'm a retired middle school science teacher from Hayward Unified School District, and I'll be speaking about the concept of sustainability. In terms of sustainability, I'd like to reiterate that holding on to fossil fuels is inherently unsustainable in terms of long-term financial value, as well as environmental, social, and governance risks. A concern I have relates to the content of the Green Initiative Task Force Annual Report, which was mentioned earlier by several people. And I was quite concerned when Mr. Ailman mentioned some of the diagrams on pages 69 and 70, which I had looked at previously, and I was very concerned about what they conveyed. He said that it's showing that CalSTRS is 11 years ahead of the pace of carbon tracking and integrating climate change into policy. My interpretation was completely different. When I first saw that, I saw that the 2 charts in their captions indicate that the authors have a misunderstanding of the science of sustainability and the significance of carbon budgets. The diagrams and the captions show portfolios and their alignments over time with a 2-degree and an amazing 4-degree warming scenario. There is no mention of a 1.5 degrees scenario. The analysis gives the false impression that carbon budgets are resources that can be spent without consequences.
Thank you. Our next speaker is
Carbon
Joan.
budgets are not like household budgets. They're more like a doctor's warning. Say your doctor tells you that if you keep smoking a pack of cigarettes for the next 10 years, you have a 50% probability of getting some form of lung disease. If you keep smoking for 40 years, the probability goes
Diana?
up to 80%.
You could give your comments, your rest of your comments to staff, and we'll make sure we get them, but we're going to proceed with the next speaker, please.
Okay,
Thank you.
just last question. Is the doctor telling you it's okay to keep smoking?
Joan, thank you very much. Could I ask you people please respect the timer, and if the timer goes off, your comments can be handed to staff and we'll receive them in writing. Joan Lohman? Joan, are you here? Okay, welcome, Joan.
So I am the wife of a retired public school teacher and administrator from City College of San Francisco, and I'm a beneficiary of CalSTRS and very appreciative of that benefit. And at the same time, I'm aware that our planet is burning up, that one of the questions that hasn't come into the room really from this side is the urgency of this decision about divestment. My alma mater, Cal Berkeley, the whole system divested this year. You all know that. The whole trend in the economy of our world is toward divestment. I'd love to see CalSTRS take the leadership. I don't like to see my retirement coming from investments in fossil fuel. I have 10 great-nieces and nephews who are going to be living on this planet for the next 50 years. We don't have time to wait on this issue. I plead with you to go deeper in this question of what it really means to take a strong position on climate crisis. I heard a lot of laughter around language that really upset me. This language around climate is so critical to our future. I appreciate everyone's efforts in the room around greening. And at the same time, we're not doing enough, and CalSTRS is not doing enough. Thank you.
Sandy Emerson. Welcome, Sandy.
Sandy Emerson from Fossil Free California. I want to commend Kirsty Jenkinson and her staff for a splendid report, which was very well presented and very interesting. I do have a comment on the presentation and reporting of Scope 1, 2, and 3 emissions. The 1, 2, and 3 emissions, the total emissions exposure was reported for the aggregate of the public equities and the fixed income. And in the pie charts, the sector contributions reported only Scope 1 and 2 emissions. Since for the energy sector, 90% of their total carbon intensity is represented in their Scope 3 emissions, I hope that subsequent revisions will reveal the full risk, particularly of energy holdings. The good news is that CalSTRS sustainable investment initiatives have outperformed the rest of the portfolio. It may be that sustainable investing initiatives will grow since CalSTRS has added 3 new ESG managers and created a low-carbon transition work plan. With such favorable returns, CalSTRS should double or triple sustainable investments. I'm sorry that these investments have remained at a token level, only 2% of the portfolio, and I hope you are encouraged to do more. Thank you.
Vanessa Warheit. Vanessa? After Vanessa is Maria Lopez Mendez, so if Maria could get ready. Vanessa.
My name is Vanessa Warheit. I'm the Executive Director of Fossil Free California and the daughter of a CalSTRS retiree. We appreciate the active role that CalSTRS is taking in their engagement alliances with actors such as Climate Action 100+, and we absolutely appreciate the complexity of this issue. But what is not complex is the fact that the energy sector in particular is currently comprised of 100% fossil fuel companies, and their profit depends on basically threatening all life on Earth. So engaging with this particular sector requires them to change their ordinary business, and the SEC has clear rules that preclude any kind of engagement on that. So it's a waste of time and resources to engage that sector. Also, that sector has proven time and again to be a bad faith actor. They are currently under multiple lawsuits for such, including many lawsuits here in California. I urge you as fiduciaries to demand active benchmarks and timelines for getting out of this sector. Other people have talked about 4 degrees as an absolutely preposterous target. I fully concur. And in closing, when you are in a hole, stop digging, which we recognize you are trying to do with this work, but please, we urge you, put down the biggest shovel first. Thank you.
Maria Lopez Mendez. Maria Lopez? Maria, are you here? Oh,
Mario.
Mario. Pardon me.
Good morning, board. My name is Mario Lopez Mendez. I am a student at Sacramento State, and I'm native of Sacramento. I am very akin to the Sacramento City Unified School District, and as being an alumni of the district, it's very close to me what the actions of CalSTRS and where the investment direction is heading. For me, I like to assume good intentions for all members of the board, and I thank you for the Green Initiative report. Very insightful, and I appreciate the general direction that we're taking as far as accountability. However, I want, in addition to that, I want to give attention to page 62 of the report, in which it describes the risk management. About the report, specifically about the idea that there is much confusion and debate, in a sense, about the impact of carbon emissions as well as of climate change that we'll have. the evidence is overwhelming as far as what the impacts will be, and within the 10 years and within generations to come. And I urge you to take a more serious and a scientifically based approach to the impacts, and to align your investment approaches according to that. Thank you.
Thank you, Mario. Esme Plasencia. Esme.
Hi, my name is Esme Plasencia. I'm a student at Sac State, and I'm here with Sac Sunrise, and I support Fossil-Free California, and I want to comment on the Green Initiative Task Force. For page 62, it says that divesting from fossil fuels is the last resort. That to me is quite surprising because it is for reasons of the health of the fund, but I think we should really be thinking about the health of the planet and the people and future generations as well as the students. I've had many teachers who I've seen as role models and leaders and have inspired me, and I truly believe that CalSTRS needs to step up their leadership and make a change. And I also wanted to comment on how it is claimed that CalSTRS is 10 years ahead, while the corporate knights said that CalSTRS could have been $5.5 million better in past 10 years. So I think they're behind, and we need to reduce carbon emissions by 0, not low carbon. So thank you for listening.
Thank you, Esme. Paula Buell. Paula.
Hi, I'm Paula Buell. I'm a retired teacher and a pension holder. And I applaud you and I approve of Belief 9, and I'm relieved that CalSTRS is taking the risks of climate change seriously. But oil and gas investments are just too risky to hold on to under any circumstances. The Potsdam Institute report that was published in the Proceedings of the National Academy of Science says carbon pricing won't reduce emissions fast enough to avert climate catastrophe. And when investors realize these fuels are too inefficient, there will be a tipping point, and those holdings will be worthless. CalSTRS is playing roulette with our pensions and our children's future by holding on to these doomed assets. I say yes to Belief 9, and what Belief 9 really means where oil and gas is concerned is divestment. Thank you.
Thank you. Casey Lusbrack.
Hi, I'm Casey. I'm 22, which is the age of incoming teachers, and I studied environmental science. And I come here to tell you I'm quite terrified of this report. You know, it's insulting how out of touch this report is. It's out of touch with the nature of SB 964. It's out of touch with what is scientifically acceptable, and out of touch with your own fiduciary duty. No one is saying 2 degrees Celsius is ideal. And anyone speaking about 4 degrees Celsius doesn't understand the science. How can you say that you are 10 years ahead when you've already used 3/4 of the budget for 2 degrees? How is that doing your job and upholding your fiduciary duty? If you don't think divestment is necessary to fulfill this duty, you're sadly mistaken. And if you think warming by even 2 degrees Celsius is acceptable, then you need to have better advisors. The science is clear, and your policies aren't anywhere near acceptable. Thank you.
Thank you, Casey. That concludes public comments for item 5. We're now on to item 6 on the agenda, which is our Chief Investment Officer's report. The remainder of the agenda today is informational items that we will get through before lunch, and then we'll break for lunch. Chris?
Thanks, Harry. Real quick, I'll run through my slides real fast. We have 3 additional comments to give you, just information to update you on, so I'll bring that staff up. We ended December 31 at about 254 billion. That was an all-time high for us. We went a bit higher in January, but we're really pretty much back at 254 where we're at today. December 31 returns are not fully in yet, but I can tell you that the preliminary numbers for the calendar year are about 18.4% net. Now, 18% sounds awesome, but you really got to compare it to adding in 2018. The 2-year number from 2018 to 2019 is 7%, 7.1. So last year looks really good, but it's because the end of 2018 was so weak. So, and obviously it's a calendar year period. We don't really focus on those. We'll put the numbers out, but not a big press release, not a big splash. People might get excited about the double digits. What I care about is the 3-year return. That looks like about 10.2%, so that should help our funding status. And importantly, over even longer periods, the 10-year return is 9.3% net. So this is our asset allocation, very close to the targets as we've been relating to you. Our position still remains neutral, but we are very worried about things like the coronavirus. Brexit initiates tomorrow, but I will tell you it's an 11-month process. So think about our U.S. elections, long, slow, and there'll be fits and starts with Brexit, but we're watching that closely about how it impacts Europe. Here's a picture of the U.S. stock market last year. You can see that, as I told you, it was a slow, steady melt up. The market definitely paused a bit in the summer, but then continued on toward the end of the year. We're finally starting to see some volatility numbers. Longer term view of the market back to the beginning of this bull market. Now it is, as I've said before, the longest bull market in U.S. history. But what's interesting is this recovery is actually one of the slowest and lowest recoveries in history. Normally, when our economy recovers, it's much quicker, but that leads to inflation. So we have been fortunate this economy and this recovery since 2009 has really helped us and helped us in the market. Here are non-U.S. stocks, and you can see a similar pattern to the USA, but a bit more flat reaction because of the Brexit deadlines that came up during the middle of the year. The yield curve, surprisingly and almost probably shockingly, has continued to drop, particularly out there at 30-year bonds. Remember talking in November and September about the flatness of the curve. It's still flat, but you can see a positive slope. So yesterday, Chair Powell's press conference was seen as very benign, a press conference that only bond people, some people called them wonks, but we called them monetary policy people, enjoyed the discussion a great deal. And but the markets didn't react strongly, which is what we want to see out of the Fed. When I climb up in the crow's nest and look out into the future of the risks that are on the horizon, not surprising, Brexit, trade wars, I don't think we'll get Federal Reserve surprises, but certainly I didn't put up there the impeachment because frankly, most of the market forecasters are not sure that that will be a material impact. You've got a lot of positives on the other side, slow, steady growth, but there are risks. These are inevitable surprises. You've asked me to put this up since 2008, and I realized in February I should move the pandemic up to the top and probably drop it lower in the summer. But I've mentioned to many of you, we've been mentioning pandemics as a potential risk to the portfolio for over a decade. We'll have to watch the coronavirus closely. Obviously, there's concern it will impact global GDP. Our exposure to China, if you look at the risk report, is still very low. I would say relative to peers, we're underweight China, but it is an area that we want to watch and see how that plays out. It will be a concern as the number of cases rise and China's reaction to it. And I think it brings up, as I've mentioned before several times, our discussion of a low-carbon future will probably take beyond just the 6-month period, and it will go into next year's investment committee work plan project. But at some point next year, we need to take a deep dive into China and really decide from a policy standpoint. I don't want to be so binary, is China a friend or a foe? Because I think the reality in America, we realize it's both. But do we want to be full market weight in China, or do we want to be underweight China, given its political challenges? And then clearly you have seen people talk about cyber attacks and further risk in that area. And obviously the 2020 election will start hitting the headlines, and the markets react to that a bit, particularly with some of the strong rhetoric of some of the candidates. But usually those are 1 or 2 day events and the markets move on. Fortunately, the market will mostly focus in on earnings. And as I've highlighted to you, I think we have to watch the consumer sentiment numbers, retail sales, housing very closely, because that will really tell us what kind of a year. Most of last year, we did not have a 1% move up or down. It was a very slow year, but positive. This year, we're already in January seeing 1% days. Doesn't mean volatility is back to stay. I think it will be a slower period, but there are more headlines on global risks that may cause that kind of volatility in the market. So I'll bring up Geraldine and Josh, our risk team. I really turned over to them what used to be known as the CIO report and turned it into a portfolio risk report. I think they've done an outstanding job, but we always want your feedback. This is customized to you, even down to colors, layout. Tell us and we'll change it. But I'm going to turn it over to them to highlight some of the key pages in the report.
Hi, Geraldine Jimenez, Director of Investment Strategy and Risk. We want to start highlighting some of the way we oversee the portfolio. Specifically, you just approved the strategic asset allocation. We give you every meeting a risk report, and we highlight not only the risk because of that allocation, but then active risks we're taking. So Josh Diedisch to my right here, who leads the risk team, will drill into that. But I also wanted to introduce to you the team. This is a very hardworking team. They're diligent and provide you these reports and the report for the senior team. So we have Angela Trent, I'm going to ask him to stand, and Matt Topel. And they do a great job presenting you and us reports so we manage. So then Josh will quickly go into some of the information that we review all the time.
Great. Thank you. I'm Josh Diedisch. I'm a portfolio manager on the strategy and risk team here. So we wanted to just drill in on two things that are part of this portfolio risk report. So the charts you see on the slide are also on page INV 140. And we're showing two things here. One is total risk for the portfolio, and then fixed income and public equity. We obviously know you care a lot about the total portfolio, and then we include fixed income and public equity now, because as we're talking more about this idea of risk budgeting and active risk budget, the public markets are kind of the first place that we want to look, because that's a pretty established way of looking at portfolios in those markets. And the information that we're providing you here is total risk, and we look at it a couple different ways. One is, I think we've talked before about, we have a risk system with models that we use for trying to forecast what the risk of the portfolio will be, but we also want to provide information on what the portfolio has actually done over the recent history. Both as sort of an idea of, does it look significantly different, and as a reasonableness check. So that's the left-hand chart. And then the right-hand chart is the active risk, which is really, how does the portfolio differ from its benchmark? So while total risk is really determined largely by your asset liability decision, the active risk, which is much smaller, is really determined by the implementation of the portfolio. And so as we talk about that more as a potential governance tool, I think that's important, both again for what the models say we expect, but also what the history has been. And then one other chart that I would point out, this one is, we also include, it's on INV 139. This is giving a high level sort of sense of the sources of risk in the portfolio. And this is, again, total risk. So we talk a lot about the growth risk in the portfolio. And when we talk about growth, we're often talking about equity exposure, and that's what you see as public and private equity. But as we potentially move forward, if you move forward with a risk budgeting framework, whether it's for equity or fixed income or other places, we would expect to provide you more information like this that is basically drilling in so that you can get a sense of what those sources are. As we're implementing the portfolio, and it will be a little bit different from the benchmark. What do those numbers look like, and where is that coming from. So this is just sort of to give you kind of a sense as we keep talking more about risk and drawing more attention to some of the reporting we provide. We have a lot more that we can show you and sort of plan to roll out.
Thank you, and we look forward to more education and discussion going forward.
Thank you.
To bring it back to home, when you think about when we adopted the capital market assumptions and we just approved an asset allocation at the last meeting, you remember it had a target return, but it also had a target standard deviation. Those are the drivers of that standard deviation. So that's why I tend to talk about the global market being the stock market so much, and most of my emails to you relate to the stock market, because that is by and large 2/3 of the driver of the volatility in our portfolio. Real estate's a good example. Real estate moves, but as you know, moves very slowly. Doesn't move up and down on a daily basis as the markets do. So a couple of other updates that we want to provide. I want to invite up Deborah Smith and April Wilcox to talk a little bit about operations. Scott Chan is going to talk about diversity on corporate boards, and then I'll conclude with a discussion on the private equity consultant. Deborah.
Thank you, Chris. Deborah Smith, your Chief Operating Investment Officer. With me is April Wilcox, your Investment Operations Director. April manages the custodial relationship, not just for the investment branch, for CalSTRS as a whole, and she's going to provide an update to you on the request for proposal, or RFP, that we're going to be issuing.
Hi, good afternoon. April Wilcox. We are in the finalization stages of issuing a custodian RFP, and as a refresher, our current custodian is State Street Bank. Since we have a global portfolio, we need a global custodian. So to put things in perspective, State Street operates in almost 30 different countries and over 100 different investment markets, and they have over 30 trillion assets under custody. And there's about a handful of custodians now in the marketplace that meet the qualifications that we would need. To also refresh on what a custodian is for some of the new board members, they hold our assets in safekeeping for us. So all of our securities are held with State Street. They are accounting book of record. They calculate all of our performance, collect interest and dividend payments, and settle our investment transactions. They do a lot of other stuff, but that just kind of gives you a flavor of what they do for CalSTRS.
And April, if I can just add, so you get the semi-annual reports, you're going to get one in March for the December information. The custodian provides all that data to your consultant, Makita, who reports the performance to you.
So since a custodian is a huge partnership and relationship for CalSTRS, it is not just the investment branch, it's an agency-wide effort. So there are staff in investments, financial service, procurement, legal, technology, and ISO all participating in this RFP. And we also have a consultant, Mercer, who is helping us review it. We plan on finalizing it around the first 2 weeks of March and issuing it, and then hopefully we will award a finalist this summer. So any questions?
A little technical. What is the length of the term of the agreement once a custodian is chosen, given the importance of that relationship?
We will be doing a 10-year contract.
Thank you. Sure. Gail?
It just occurred to me, thank you for that, how we educate the custodian about the collaborative model and what the expectations for the custodian are vis-a-vis our collaborative model in the RFP.
Yeah, and we actually have on-site staff at State Street who sit with us full-time, so they are very much engaged with our direction. We have a lot of meetings with the custodian on the collaborative model. We specifically have twice a year with all of the senior management and directors in investments and in financial services, where we talk about our plan, how we're going to get there, and they help align their services to get us there. So they're definitely very involved.
Was that included in the RFP?
All of the oversight?
No, the collaborative model. The future of the collaborative model.
The services that we need for the collaborative model is included in the RFP.
Great.
Yes.
Thank you for that.
Lynn?
I'm just curious, how long has State Street been the custodian?
30 years.
So through 3 RFP processes prior to this?
I believe it's 2 RFP processes. Our current contract that we have right now does not have an expiration date, and so we weren't required to go every 10 years, but we are changing that for this one going forward.
Okay, thank you.
Keith?
How many potential competitors are there?
I estimate there's probably 5 who could handle the complexities of our business. I'm not sure how many will bid on it, but that's my guess.
Karen?
Oh, just a quick question then. So does that mean the RFP will cover the global custodian, and then so State Street will not be involved with us anymore? I guess I'm not sure if there's going to be 2 or just 1.
There will be 1 custodian. State Street currently is a global custodian. And so this is to go out there to determine, is State Street still the best out there for us? Okay. Or is there someone else out there in different services that would be better aligned to our goals?
Okay, thank you.
I think that concludes the questions. Great, thank you.
Thank you.
Deborah Beck, is that it? Great.
Great. So my name is Scott Chan. I'm the Deputy Chief Investment Officer, and I'm going to talk about diversity on private boards and their portfolio companies. And I just wanted to say that this is in response to a letter that Controller Betty Yee had written to Harry Keeley, our Investment Committee Chair. And she identified some very important issues, particularly diversity at private equity firms, where she noted that 5.7% have women board members, a starkly low number, as well as only 18% employees who are women. So I wanted to talk to you about a conversation that Lynn had and just bring it to life, because we want to talk a little bit about CalSTR's response and what we're doing and how we're organizing ourselves. So first, from an industry perspective, I think that we thought it was great that ILPA is now including diversity in their questionnaires, and that's becoming a little bit more standard. But in our opinion, that doesn't go far enough. And so I just want to talk about the way we're approaching this from 3 angles. One is how we're organizing our resources. Number 2, how we're engaging private equity firms, our peers in the industry. And third, how we might be leveraging existing resources and associations that we're currently a part of. So the first part on resources, we've recently decided to develop an internal steering committee composed of many of our senior leaders in the investment branch. So I think that this is getting a lot more attention from an internal perspective and elevating the issues. The second is that we're hiring a diversity officer. We have a position that's currently posted in the market. And one which will have 3 primary roles. As you know, we're managing more of our assets internally, so how are we building a diverse workforce? Secondly, how are we managing the external managers in terms of diversity? And then thirdly, being able to source and be able to help with the investment side of the equation. So the other thing I wanted to say from an internal perspective is that June Kim is spearheading many of our efforts now, and she's providing her leadership. She has a passion for these issues and has been taking over Beyond Talk. So I've been working closely with her. Moving to engagement, I think you've heard Chris and the investment team talk about first, how do we define diversity? So we've worked internally in the investment branch as well as with the rest of the organization to try to come up with a definition, which we hopefully will be presenting to the board in July. And that's the first step for us to define it and then go to our private equity partners, which we've been engaging, to start to develop and consider ways where we can measure progress over time. Both at the private equity firm level as well as their portfolio company level. And so we've been engaged in doing that. And I think that what you'll see is we'll be trying to leverage coalitions. We'll try to band with our peers in order to engage this effort. The last thing I wanted to bring up is how we might be leveraging some of our existing resources, because stepping back on the public company side, we've done a lot to engage public companies. And so I'm just going to cite three of those. We're involved in the California Initiative, where we engage our portfolio companies, public companies, headquartered in California, where we don't see women on their board, and we've been doing that with both CalSTRS and the University of California. I wanted to cite number two, the Coalition of Six, where that effort is important for us to try to develop a pipeline of candidates to create more diversity on boards as well as at firms. And finally, I wanted to just thirdly cite the 30% Coalition, where we've banded with roughly 24 plus other investors with over $3 trillion in capital to engage companies on board diversity. And these initiatives, and particularly the last one, they do have a private equity arm of that, so we'll be seeking to leverage these coalitions into the private markets. So hopefully that brings to life the conversation we had, Lynn, and I'd be happy to answer any questions.
Thank you, Scott. Let's go to Lynn.
Thank you. I just want to thank you so much, Scott and June and Chris, for all your efforts on this, and on behalf of the controller. And she's been very keen to make sure that we take a leadership role and ensure that private equity firms and the portfolio companies also have the board diversity, which we know has been so helpful in impacting positive returns on the public side. So thank you again for the leadership on this, and the controller is happy to help in whatever way that she can. And Mr. Chair, we appreciate your support on this too.
You're very welcome.
Thank you.
My pleasure. Joy?
Just a quick comment that, as we discussed earlier with the work that we do on sustainability and the transition to a low carbon economy, there's a lot of work that we've already done historically with CalSTRS, and we're continuing to build on that. And I think I just want to recognize that I think CalSTRS has already done so much and been a leader on these issues. And I think I really welcome the controller's suggestion that we focus on this area as well, and wholeheartedly support it. So look forward to continuing to get updates and also seeing June's leadership on this issue. Thanks.
Ditto. Thank you very much.
I'll wrap up. Took longer than the 10 minutes, so sorry about that. I'll work on the timing next time. I just want to alert the board that your private equity consultant, so this is Makita, who works for you, not in the general consulting capacity, but specifically in private equity. That contract is up in September. Contracts and RFPs take a long time, so I'm giving you a heads up now. You've done these RFPs differently in the past. Some board members involved, sometimes you've delegated it to staff. You've always been involved in the finalist selection. My encouragement would be to pass ideas you might have on to Harry and Joy, and I'll meet with the chair and the vice chair to decide how you want to structure it this year. Last time, I can't remember the exact number, but we don't get a lot of bids because our consultants don't have discretion. Firms want the ability to place the money. So generally, it's under 5 firms, I would say, that have bid on the private equity or the real estate consulting applications. Obviously, as you know, our procurement process is very serious. So if a board member wants to be involved, that means you have to read all the RFPs and do lots of different things. But leave it up to you. It's your contract. We're just the staff to be of service and how you want to execute it. And you also had mentioned in the past you want an overlap if you ever change consultants. So we may come back to you in the summer asking you to extend their contract to December 31. It ends, I think, in September, if you choose to change. If not, then that wouldn't be warranted.
Thank you, Chris. Okay. Appreciate that.